guys. Tom's not here today. He's out for the afternoon. I'm John Logan, filling in, and happy to be here. I had a lot of action today. We're going to try to cover some of it, try to make some sense out of what happened today with some of the Ukrainian, Russian, some of this that happened this afternoon, or actually around lunchtime, I should say. And the first thing we're going to look at here is we're going to take a look at, if you're seeing my charts here, we're going to take a look at the S&Ps and just try to figure out what exactly happened. Here's the situation on our S&Ps, and here's our unfair lows on our weekly. This is the inflection point that we paid attention to on a long-term basis for quite a while here now, and 1933 is that level, along with that 1940 on our S&P level, on our S&P daily intermediate time frame. And as you can see, past couple of days, we've closed above, come back and retested, launched forward. We actually almost reached to the tick our former breakdown level on our daily. 1961.50 was approximately that price. Came up today, and actually, let's see, where did we reached 1961. That was a target we talked about possibly being on the upside this morning, and then we had the break. But 1940 seems to have held again, and for the shorts, that's pretty damning. Considering that we're back in the fair auction on a weekly, and it looks like we're going to have a Friday close within that fair auction. And what do I mean by that fair auction? That is where prices are considered to be balanced. And if you think about a bell curve in statistics, you talk about that meaty part of the bell curve where most of the statistical data should lie. On a long-term basis, the most of that statistical data should lie between 1933 and 1978 right now. And we've crossed some borders, and we've come back and retested those on the downside here, where we had former resistance on a daily, now support at 1940, and that's just the way it goes. On a 240-minute, we bounced around within that fair auction. We're still within, but that's pretty strong to get that kind of news, ricochet down, rally back up. Not that that's more than likely going to get settled out. It's a pretty tense situation, but. Wanted to also bring up the DAX here just to kind of give you an exercise in volatility. The DAX, as we know, has been in a relative weakness type downtrend relative to the S&Ps. And here's our daily. This is what we want to focus on. And this morning, if you watched our show from 8 to 9, we do a pre-market kind of dissertation on what might be happening globally. It's called the Global Market Pulse, actually, from 8 to 9. We talk about, inflection points and what to be aware of during the day. And, we were above our unfair highs. If you can see this, folks, on the radio, you can't see it, but those unfair highs on the DAX are and were around 92.55, and the downside was 90.43. Well, we actually explored that entire fair auction on a daily, which is very rare, in about 30 minutes. So if you're trading the DAX, remember, I think it's $25 or $30 a tick right now. Maybe it's 20. I don't know what the latest point value they put on that, but if strap your seatbelt on and be prepared for volatility no matter what happens in that particular index, because it's usually over exaggerated. And on a relative weakness scale, the DAX has proven to be within a fair auction, unlike the S&P above that fair auction. So again, DAX has kind of proven itself out to be a weaker instrument. And I'm not saying go out and put a long S&P short DAX spread on that intermarket spread. Those are interesting to look at sometimes. But the DAX is a volatile instrument, and if you're faint of heart, stay away. All right, now let's go to one of the things that I like to take a look at, which has been one of the more easier setup, high probability, high risk reward scenarios. Somebody just told me it was $12.50 a tick, and or $12.50 euros per tick. And I think there's a larger contract actually that might be a little bit bigger than that. But we're taking a look at our weekly on the 10-year, and what we've kind of taking the stance on with this is, and as this might have been a flight to quality today when the disturbance happened, but this thing's looking for any reason in the world, so to speak, to go up, and it proved itself out again this week by using that breakout point at around 125.21 that we've been speaking about, closed above last week, came back and retested this week, and then off to the races. And the daily situation on the 10-year As you can see, we came down and hit the unfair highs at 126.0304 to the tick today. To keep that long-term trend is up, let's try to find support levels with putting our stops down below those levels to try to launch even higher. And as, little or good sense that makes if you're looking at it from a fundamental reason where the stock market's almost on all-time highs again and rates are going lower, that disconnect in that normal relationship over time, really, as a trader, you just it is what it is, and you got to turn the wrench the same way until you're told to do something different. So again, 126.0304 has been the support on the 10-year for today, and that launched higher. And the good news is on that type of trade, if you're looking at trading treasuries, it's seemingly market goes up, treasuries kind of go flat, stock market goes down, treasuries seem to go up, and as treasuries go up, lower rates, obviously the stock market likes that. So this is kind of a race where you've almost eliminated the short side. And when you're looking at some of the information that we look at with these profiles, you're always trying to eliminate one side of the marketplace, and that one side of the marketplace we tried to eliminate on these treasuries is the short side. Now, we will not have any technical damage, really, so to speak, on this particular product in the least until we get down back below 125.21. So this is something you want to stay away from on the short side, in my opinion, just taking a look at the basic profile technology that we look at on a day-to-day basis. Now, something else I looked at today in the global disturbance here is gold. With that type of international event, gold, in my opinion, should have rallied a little bit more and spiked a little bit more just on fear alone. We're still hovering right around that 1303 unfair low in our weekly. So that's the fence, if you will. As you look at this product, the compression that's happened over time, lower highs, higher lows, coming down into that 1300 level really hasn't changed. And today we've had some long opportunities at that 1307 area, which was kind of that border above that 1303 area to try to enact some longs. We've caught some good bounces there, as you can see. For you guys listening on the radio, we've tried to, we've gotten back above 1303. We got above 1307. We were using that 1307 to trade a little bit higher. Well, today we talked about pre-market. Got to say uncle below this 07 and for all intents and purposes below 1303. And if we get back above those areas, you got to be able to get back in the game. Taking stops is a part of the realm of trading, so to speak, and we want to try to, lose a little, make a lot, and that's the theme of any good trader, any good investor. Hopefully, will not let things go too far against him before he says uncle. So, taking a look at gold, we're back above trading above 1303. I think there's going to be somewhat an unrest, so to speak, in investors' minds that what will happen over the weekend. Anything can happen. Putin's got nuclear weapons. I don't think that's going to happen. But again, gold's always been that kind of inflation fear type hedge, and you've got to pay attention to what's going on in the gold environment. But that being said, in my opinion, gold should have already rallied quite a bit off that news alone and probably stayed up, and that's relatively bearish for gold in general if you look at it in that sense. Now, if you're looking at silver, a lot of guys that watch this show, a lot of people out there listen to the radio, follow silver and gold. Silver kind of showed its hand to be somewhat weaker than gold on a relative scale below that 43, 44 area. And if you look at the daily, we have this new inflection point. Okay to be short, not okay to be long, below 1986, 87, and that just, imploded in a big whoosh sound below there. We had a little bit of a, slight rally activity here. I'm going to show you on the 240 as we rally back up. But, it showed its hand again. This is the type of instrument. It is what it is. Gold's acting a little bit more weaker than it should, and silver's kind of in tandem on a relatively weakness type situation, going down even farther, faster. I'm John Logan. We'll be back shortly. We'll cover quite a bit today, so come back and stay tuned, and we'll hit a couple of stocks that are in play and a couple of scanner picks.